Hello, and you're welcome to Global Business Insight, where we look deeper at the headlines from a business perspective. Later today, Vice President Kamala Harris is expected to paint a picture of the economic future she sees for the world's largest economy. Harris is set to deliver a speech on her economic agenda in North Carolina as the Vice President carves out her own positions after replacing Biden as the Democratic presidential nominee. Yesterday, President Biden, in a victory lap for efforts to negotiate lower drug prices, announced deals with pharmaceutical groups to cap prices on 10 of the country's most expensive medicines, saving $7.5 billion. Gold rose to a fresh record high above $2,490 today as investors continue to bet on the Federal Reserve cutting interest rates in September, despite release of better than expected retail sales data yesterday. U.S. consumer sentiment rose slightly this month as the August University of Michigan survey gauging the mood among consumers inched up from 66.4 to 67.8. But housing starts in the US fell 6.8% in July to 1.238 million units, following the 1.1% increase that's revised from 3% recorded in June. In the same period, building permits decreased 4% after rising 3.9% in June. UK retail sales rebounded in July as better weather led to more spending for department stores. Volume of goods sold in stores and online in the UK rose 0.5% in July after a revised drop of 0.9% in June. Growth continues to be tepid, better than the recession, but not materially so. The GDP, that's gross domestic product report, showed quarterly growth by just 0.6% and 0.9% on an annual basis. The pace was somewhat slower than the previous quarter growth rate, but still demonstrates resilience amid doctor strikes and high borrowing costs. China's July retail sales was up 2.7% year-on-year, slightly higher than 2.6% expected and 2.0% in June, while industrial production rose 5.1% year-on-year in the same period, less than expected and also behind last month's 5.3% print. We keep getting conflicting signals on the Chinese economy. In July 2024, Nigeria headline inflation rate yesterday showed evidence of peaking as it started inching down to 33.4%, lower than June rate of 34.19%. This was also the first time inflation in Nigeria has eased since December 2022. We'll replay our discussion on Nigerian CPI. Welcome back. Later today, Kamala Harris will lay out her plans for the U.S. economy, focusing on how she will bring down prices. Already, the more recent FT Michigan Ross poll showed her narrowly ahead of Trump, on whom voters trusted more on the economy. The economy is said to be number one issue for voters. Her campaign has already announced a crackdown on corporate price gouging, also includes plans to make housing more affordable, tax incentives for home builders, plus financial support for first-time home buyers. She will double down on the clean energy agenda, and there would be several rabbits maybe coming out of the hat. On top of her to-do list could be a federal ban on food and grocery price gouging, also giving the Federal Trade Commission and state attorneys general the authority to investigate and impose penalties. Harris will also call for the construction of 3 million new housing units and a new tax incentive for builders that construct properties for first-time home buyers, plus a $25,000 package to assist first-time home owners secure mortgages. In 2022, the World Bank had said that temporary price controls can be inefficient and costly, though acknowledging they have a role in checking inflation expectations if designed properly. Cash to assist first-time home owners to secure mortgages could also threaten to further push up housing prices. Kamala has both the lead and the momentum now, even ahead of next Monday's start to the Democratic National Convention, which will give an extra bounce. And Trump could be sentenced on September the 18th, which won't hurt her chances. And there is still the debate on September 10. Donald Trump also has found an unlikely ally in Elon Musk, who hosted him at an event with over 1 million live viewers, also telling his 190 million followers with over 20 million views of recording that Kamala represents an existential threat. We have to listen for how Kamala proposes to humble market forces, as more goodies for voters and a larger government implies higher government spend, I think, funded partially by higher windfall corporate taxes and taxes for the wealthy. All this as we all get ready for a probable Harris presidency. But will it be Bidenomics 2.0 or Kamalanomics 1.0? Biden says it's Bidenomics for sure, but we'll have to wait and see. In July 2024, Nigeria's headline inflation rate came down 33.4%, lower than June's 34.19%. Inflation is still too high, especially in the northern part of the country. Still, continued naira devaluation last month and lingering supply chain issues were more than compensated by the impact of measures to reduce costs of food imports and fading of the base effect associated with subsidy removal and convergence of exchange rates. Furthermore, on a month-on-month basis, the headline inflation rate in July 2024 was 2.28%, which was 0.03% lower than the rate recorded in June. That was 2.31%. Food inflation also easing. Food inflation rate in July was 39.53% on a year-on-year basis compared to the rate recorded in July. That was 26.98%. Food inflation also was at an all-time high of 40.87% in June of 2024. On a month-on-month basis, the food inflation rate in July was 2.47%. That's a 0.08% decrease compared to the rate recorded in June. But core price inflation grew, that's inflation excluding agricultural produce and energy, albeit up slightly to 27.5% in July from 27.4% in June. The data confirms the central bank's perspective and Stanbic IPTC S&P July report, which said PMIs were at an 8-month low of 49.2 from 50.1 in June, but also said that headline inflation most likely peaked in June and is expected to moderate in the second half of 2024 as the effects of the PMS subsidy removal and currency depreciation fade, coupled with the start of the primary harvest season, potentially boosting economic activities. Still on the economy, the central bank also has released its July PMI 2024 report showing the composite PMI stood at 49.7 points, indicating contraction in economic activities for the 13th consecutive month. But the index showed improvement compared to the 48.8 points recorded in the previous month. Services PMI showed the sector in expansion territory at 50.3, while industry PMI 48.3 and agriculture PMI 49.7 were both in a shallow contraction. The data also shows that the new orders in July for all sectors were all in decline, somewhat predictive of economic sluggishness. This is the first time inflation is easing in Nigeria, like I said, and it's definitely some relief to frustrated Nigerian citizens burdened by high borrowing costs and tight wallet space. A sustained trend of declining inflation will support the Monetary Policy Committee's view on normalizing rates as quickly as they possibly can without losing the gains in fighting prices. The next meeting in September 22 to 24 will have the August CPI and PMI reads to inform their decision on monetary parameters. Yesterday, we got the UK economy showing growth to June by 0.6% as we continue to see tepid recovery from last year's recession, also in line with forecasts. This comes after Q1 GDP growth of 0.7%, with growth led by the services sector, in particular IT industry, legal services, and scientific research. According to Liz McKeown, that's the Director of Economic Statistics, the UK economy has grown strongly for 2 quarters, following the weakness that we saw in the second half of last year. The Apex Bank, that's the Bank of England, cut rates to 5% in August, giving Prime Minister Keir Starmer a good start as he aims to take the bricks off Britain's growth, with plans to make it easier to build houses and infrastructure. Chancellor Rachel Reeves also said the scale of the challenge inherited by the incoming Labour government was daunting. Today, we also saw UK retail sales up 0.5% month-on-month in July, also meeting estimates. We also had the monthly core retail sales up 0.7% in July. The annual retail sales in the UK climbed by 1.4% in July versus June's 0.3% fall. So a bit better as far as the consumer appetite is concerned. The better GDP and consumer data will encourage the view that the Bank of England will hold rates unchanged at its meeting in September. Can the Labour government overcome the inertia, and how quickly will cost of borrowing come down in 2024, and how will that transmit to higher growth? But it's still looking up for the UK economy. In Japan, as the yen eased, falling 1.3% against the dollar, fears of massive carry trade unwind that spooked markets last week also eased. It's worth explaining what carry trade means. The carry trade is when an investor borrows against an asset expected to trend lower or offers a lower yield, and uses the proceeds to invest in an asset that is expected to trend higher or offers a higher yield. The borrowed capital is carried from one asset to another. In the latest yen carry trade situation, which led to panic drawdowns in US stocks, investors had been borrowing the yen at a lower cost and using the proceeds to buy higher returning tech stocks in the US. A falling yen made this profitable and led to demand for tech stocks also going up, and of course investors profited. So when the yen suddenly rallied, and also as the Japanese suddenly unexpectedly raised interest rates, as the Bank of Japan, carry traders rushed to sell their US tech stocks to pay back yen borrowings that had become more expensive and less profitable. Also at a time of nervousness around some of the US data and the outlook for artificial intelligence leading to something like a crash. The Bank of Japan's senior official since then has assured that it was not expecting to raise rates any further in the near future, and that seems to have calmed markets. European stocks rallied as the week ended, and US stocks also posted solid gains with the boost from falling weekly jobless claims and stronger US retail sales data coming in there. Some analysts, however, pointed out that the recent retail sales uptick was not broad-based, with sectors such as food, clothing, and household goods still struggling. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please do send your comments. Again, thank you so very much for watching. Enjoy your weekend. Bye-bye.